Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Before we get started on the technical analysis, I just want to say thank you to everyone that's reached out for all the well wishes and everything. I'm starting to feel better in some ways, but still very well under the weather. Just been resting a lot and trying to recuperate. But overall, I would say that I'm slowly getting better. But here we have the Bitcoin chart on the 4-hour. I'm looking at Bitstamp today, and as you'll see, we did get our breakout of the descending broadening wedge. We hit the first target and also hit the measured move with a little cherry on top as well. And we found resistance exactly at the final point that we were paying attention to. I did go ahead and take a short off that position, but again, I'm not overly bearish in this situation, but you'll see that from the top at 20,000 to the bottom down here at 3,000, we basically moved back up exactly to the 786, at which point in time we basically found resistance and sold right back off. So just switching over to the daily so we can get a clearer picture, we literally tagged it to the T with the wick exactly. And again, make sure that you're on log scale as well, or this is not going to make sense. Also, when you put your fibs on, make sure that the fib tool, when you double click it, is based on log scale. So if you just double click on your fib, if it's already on your chart, scroll down to the bottom and you'll see there is a click box that says fib levels based on log scale. Make sure that if you are on log scale using fibs and you have log right here, that you click that as well, or your fibs are not going to make sense and your measurements will be off. But in this case, what I'm paying attention to is the wick at the top, followed by continuation. Double top on the wicks right here, but at this point in time, it doesn't necessarily look like we're not going to get further continuation as well. There was a lot of bullish news with the PayPal and all that stuff, but the truth is, this line has been on my chart for weeks. We were inside of a descending broadening wedge, so regardless what the news catalyst is, or you know, what the excuse is for people to say that we got this big pump, the fact of the matter is the chart was telling us that you know, the break of this pattern was going to give us this move as well. And you may recall also that this purple line here is the heart line of that descending broadening wedge. And I said typically when this breaks out, what will happen is you'll come up to the top, come to the bottom, come back up to the top, and then you'll come back down and find support at the halfway point before you break. That almost always happens with a descending broadening wedge. Once you find support at that heart line, that halfway point, you know, you gain strength, come up to the top, and then on a break, retest, and continuation, which we did get. Honestly, was not expecting the move, but that's why we do technical analysis, so that it's not just based on our opinion. We have targets in place. We have potential moves in place. I did take a short off this area that got stopped out after we hit the first measured move, and once again, I'm taking a short off this area as well, as that's just how I trade. Regardless of direction, regardless of you know, what I think is going to happen, I always pay attention to the technicals. Always do the technical analysis in advance. That way I do have targets regardless of if I'm right or wrong. I can still make money in the market. And a lot of times it's important to know also that when someone says that they're shorting a position or an area or whatever, it doesn't necessarily mean that they're going net short on that area. Like if you have a hodl position or a long-term swing position or whatever you want to call it, you know, taking a short in many ways is just you know, taking profits on your spot position. So if you own let's say 2 Bitcoin, and when you get the measure move up here, you could short 1 Bitcoin, you're still net long 1 Bitcoin. When you get stopped out right here, you become net long 2 Bitcoin again, capture the entire move, and then when you come up to the top, the next resistance, you know, potential area that you're going to sell off, once again, you can go net short, let's say 1 Bitcoin again, and you're now net long 1 Bitcoin instead of net long 2 Bitcoins. And then in the event that this comes up here and takes out your stop as well, once again, you would be net long 2 Bitcoin. Or if we start to get continuation back down and this looks like it's going to fail and become correlated once again with traditional markets, you know, you may choose to short another Bitcoin, and then you would be flat essentially. So the idea is that you still have the same amount of spot, you know, in your hold account or in your swing trade or whatever, but you're also scalping off those profits. So whatever happens here, if it starts to sell back off, you still have captured all the profits right here, and then you can close your short back down here, and then once again you have the same amount of Bitcoin. You made money on the way down, and then depending on what happens from there, you essentially put more money in your account that you can use to buy spot. You can use to buy a different asset like gold or silver. You can use to pay your bills, whatever you want. But the idea is that when you take positions, you're paying attention to your overall net position, not just the actual position you're entering. So when someone says they're shorting an area, in many ways you're taking profits on your spot positions in the same way that you might buy spot to close out a short position. So if you're short Bitcoin and then price moves in that direction, back down here 10%, you may choose to close that short out and then use the money you made off that short. So if you shorted one Bitcoin, it goes down $1,000. You made basically $100. You might take that $100 and pay your bills with it, or you might take that $100 and you might buy $100 more in Bitcoin and increase your overall spot or hold position. And that is very important to take profits on your trades and then put them into investments if you're in that position. So a lot of times with crypto, because we are in a downtrend and haven't been in a downtrend for years, what I'll do is I would take my profits in whatever crypto I traded. So if I was trading Ethereum or trading Uni or something like that, I might keep 10% of my profits in that crypto so that I develop a hold position in random altcoins. And then, down the road may take profits on those and sell the spot, or I may take that entirely into cash and pay bills with it, or I might take it and purchase another asset like gold or silver or Tesla, something else that was in an uptrend, with more potential for upside. So it's important that you learn the difference and also that you distinguish multiple accounts and time frames, not only that you're trading on, but like hold positions and then investments, and distinguish the difference between all those different things as well. So it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So in this position now, we are definitely looking much more bullish. We did exactly what I said, which was come up here and take out a new high, which is great. I'm very excited about that. Obviously, but once again, we are at a key resistance point. We are still in an overall downtrend. What we need to pay attention to is, do we on a long-term scale, daily, weekly, monthly, do we put in a overall higher high on CME markets, not only just spot as well. So if we go over here to the CME chart, you'll see that on the daily, we are now up at the 12,990 range. And previously when we came up here, you'll notice that our high was on the close daily CME. We were at 14,195. So until CMEs gets a daily close above 14,195, we are still putting in a lower high. So this was our high right here. That is a lower high. So until we get up here and get that close above 14.1, we are still putting in a lower high. So this is a sideways consolidation and overall downtrend. And then if we switch over again to the weekly as well, you'll notice the same thing in effect. Now the weekly is going to close on CME today, but our previous high was 12,625. We are currently at 13,000. So unless we sell off $375 on the weekly, we will be closing a higher high for the first time on Bitcoin since basically our previous high back in 2017 when CMEs opened. So this is a potential big area right here, assuming we do not sell off a few $100s and we do get that close above 12,525. This is definitely a monumental moment, as a $475 sell-off is not extremely likely by any means, but is going to $375 sell-off is not that likely in the next few hours, like 7-8 hours, whatever, 6-7 hours. But in the event that it does happen, we could still put in a lower high right here. And then if we switch over to the monthly as well, we'll see that our previous high on the monthly was in fact at 12,635. So once again, same area. So we're paying very close attention to see what happens here on the weekly and monthly. Obviously, we have a little time till the monthly closes, another week or so, but the weekly closes today on our spot markets. So it's on the CMEs rather. So very important that we pay attention to that, as it does potentially signal the beginning of a trend change, or at least a potentially sustainable move to the upside. So but we do want to pay very close attention to that. We do want to be very careful in the meantime and see what happens here as well, because as you may have noticed already, S&P and traditional markets are not looking particularly great. We did the exact same thing, came up here, put in a high, came back down, and then put in a lower high. And if we go ahead and draw out our Fibonacci tool, fib retracement from the high to the low right here, you will notice that we came up exactly to the 886 of the micro move, I'm sorry. So we came down, sold off, retraced, bullish retracement of the bearish move. It's an internal retracement of the move, back up to the 886, at which point in time we sold off. We came back down, attempted to retest, could not close above the 786, found support on the moving averages and attempting to move up now. But most likely what's going to happen here is we'll either come back up to the 786, at which point in time we get rejected and put in a high, a lower high, and then continue to sell back off, or we may get rejected anytime before then. But we did get the hard sell signal coming out of the bullish control zone. We do have red histograms on the TJD TMACD. We are above the slope line, but it is red, so we would expect to get a bounce here and then either get back support here and move back to the upside, or if this flips back over and continues to break through the histogram, continuation to the downside, at which point in time we could get a violent sell-off, either which come down to a higher low, or take that out and potentially retrace like the larger move as well. So if we were going from the bottom that we put in here in March, and we're going up to the top here that we just put in, you will see that we basically came down almost to the 236, got the move back up, at which point in time we failed to put in a higher high. I would expect us eventually to come back down here and touch that 3,191, which lines up perfectly with the exponential 200 moving average, or depending on how long it takes to get down there, could line up with the simple moving average as well. But that is the main area I'm paying attention to, to see, can we find support here. If we do not, it's going to look like a double top. We also have put in divergence on quite a few markets as well. If we switch back over to Bitcoin, pull up our indicator oscillators, you will notice that the previous high we put in back here, let's just pull this up real quick. The previous high we put in back here, the histogram was at 559, and here we are right now at 475. We obviously have not topped out yet. We have not actually started to sell off, so we can't confirm this is actually a top at the moment. So in that case, we don't want to get too excited and start calling out divergence. But based on the amount of energy, not very much it took to move up to this price action compared to here, it would essentially represent a divergence. We have a high right here, we have a higher high in price action, we have a high right here, we have a lower high on the histogram. And once again as well, if we take a look at the the Jewel Thief as well, you'll see we put our high in right here, topped out at exactly the same area, right at 87.54, and then we topped out here again at 87, basically 85, which is just slightly lower. And now here we are once again at that same area. We have a high on the knife, we have a lower high on the knife, we have a high on the knife here, lower high, lower high. So essentially what's happening is we're now proceeding to put in on the macro divergence. Again, we haven't confirmed that this is the top yet, but also on the micro, when we look at these 2 points right here, we are putting divergence between this point and this point, and that is a bearish divergence. What it represents is that there are no sellers coming in, so price is just going parabolic because there's no resistance. The price moves up to the upside, and then price action is unsustainable because the oscillator does not have an accurate amount of people coming in buying this asset to move the price up to that range, relative price and indicator oscillator. So it is very likely that this is not only the measured move, but also a PayPal pump. And typically, if you know anything about these markets, when something is restricted for a while and then all of a sudden it pumps prior to news, buy the rumor, sell the news. So the smart people were already in this move ahead of time before the PayPal news was released, and now the masses flood in trying to buy this asset on PayPal for the first time, and typically tend to get wrecked and lose anywhere between like 10 and 50% of what they put in. And also it's very important that you pay attention as well with something like that PayPal move. Essentially it's just like Robinhood. You are not actually buying crypto, you are not actually investing in crypto, you are paper trading. In the same way that if you buy a silver or gold bar, you're buying actual silver and actual gold, versus if you trade spot markets versus paper markets. If you go online and invest in gold or silver, there's nothing actually backing it up. There is no gold, there is no silver. You're not going to physically get that. You can't remove your crypto from the exchange. So there's a very important distinction between those things, and a very important reason why cryptocurrency is so important. And it is essentially like the ability to control your assets yourself, in the same way that physical gold and silver gives you the ability to control those assets yourself. In the event that basically a company goes out of business, there's a scam. The reason people talk about owning your keys or owning physical metals is, as a hedge against the system failing. If the system doesn't fail, you don't need gold and silver. You can just invest in the stock market, and it can just go up parabolically, forever, because that's what it's designed to do. As where gold and silver are essentially a hedge, a safety net. You're buying insurance against something going wrong. And if something goes wrong with the stock market, just like we saw with the crash back in March, silver dropped down to like $11, $12. But if you try to go to a pawn shop or online at Jam Bullion or one of the other sites, you're going to pay for actual silver. Even when it was crashed down to the bottom, it was almost double the price. You're paying like $20, $24 for physical. And there's a reason that happens, and the reason is because of the massive amounts of leverage that goes into that paper trading, and the fact that there's nothing actually backing it up. So when something crashes like that, the reason the price goes down on the paper markets, but the actual price doesn't go down, because there's no one actually selling those assets that has them. In the same way that if PayPal or one of those companies gets hacked or defrauded or investigated by a commission for not following correct regulations or whatever, the price can crash, but it does not mean that someone is going to sell you their Bitcoin for $100 just because an exchange crashes down to $100. Or same thing with silver or gold. Just because the paper markets crash does not mean somebody out there is going to sell you a gold bar for $1,000 when it's worth $2,000, etc., etc. So but there you have it, guys. Just wanted to do a quick update. Going into the weekend, obviously very important. See where these markets close at, and potentially putting in our first high on the daily and weekly CME. So it's very exciting. Daily is a little further up, but if we just maintain price here, we'll get the weekly. And we're only a week away from potentially the monthly as well, which would start to make me bullish. Obviously, the next main way to get bullish, the primary thing, is to take out the all-time high, but there's no need to wait from 13,000 all the way up to 20,000. You can go ahead and do what we always talk about, which is dollar cost average into an uptrend. People always want to dollar cost average into a downtrend and get a better price, but a lot of like the altcoins in specific are just like dead heartbeats, just constantly going down, and eventually you run out of money before you ever see that price action move in your favor. So essentially you're just investing more and more and more in a loser. As opposed to if we start taking out the previous high, that's a blue sky breakout. So if we can start trending to the upside, you can start dollar cost averaging into that asset on its way back to 20,000, taking profits, when we hit key resistance like our previous top, or, key fib levels, and then, repurchasing at a lower level, but at least confirming that we are in fact in a longer term uptrend, or on our way to an overall bull market again. So there you have it, guys. Crypto Trend Trader, and I'm out of here.